Good morning, everyone. Well, with less than 48 hours left to go before the U.S. runs out of money, the government is still unable to come to any agreement on how to avert default. Apparently, the Senate is working on a plan, but the House Republicans couldn't even agree on a deal that would be unacceptable to the Democrats and President Obama, much less one that would pass. The British phrase, unable to manage a drinking party in a brewery, comes to mind here. Short-term T-bill rates soared yesterday, and Fitch put the U.S. on credit watch as the market prepared for a default. Yet, oddly enough, the dollar was higher against almost all of the G10 currencies and the majority of the emerging market currencies that we follow, too. This happened even though the Empire State Manufacturing Survey fell to the lowest level since May. Now, much of the dollar's gains occurred yesterday following the better-than-expected ZEW survey that boosted thoughts of global growth and caused an outflow from the safe haven Swiss franc. It was noticeable, though, that the drama in Washington overnight failed to erode the dollar's gains entirely. That raised an interesting point. In case the U.S. does default, might the dollar be the beneficiary? That is, while a U.S. default certainly won't be good for the U.S., it won't be good for any other country either. And if you look at the 2008 financial collapse, the U.S. turned out to be the safe haven of last resort, even though the U.S. was also the source of the problems. Now, the lack of any disruption to the long end of the U.S. bond market recently suggests that even in case of a default, the U.S. Treasury market could still be the global bolt hole. That means the dollar could actually benefit, in the short term at least, if the U.S. government proves incapable of reaching an agreement today. Today's Treasury auction will be a big focus of interest, especially the $20 billion in one-month T-bills. Will anyone want to buy bills that might not be redeemed on schedule? Also in the U.S., the National Association of Home Builders Housing Market Index is expected to have fallen 1 point in October, but it would still be at a relatively high level. Also, the Fed releases the closely watched Beige Book. Here in Europe, the focus of attention today is on the UK employment data for August. The unemployment rate is expected to remain unchanged at 7.7%. The figure is closely watched as the Bank of England has made a decline in unemployment to 7%, a prerequisite for raising interest rates. Later in the day, the final figure for the Eurozone CPI for September is coming out. As for speakers, ECB President Draghi is speaking in Frankfurt, while another ECB member is speaking in Luxembourg. For more information, including technical analysis, please read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.